specific to Republic Bank, we engaged in negotiations for a collective agreement which spans the period June 1st of 2012 to May of 2014, the 3-year period, June 1st, 2012 to the 31st of May of 2014. And that has been attracting some significant attention, particularly because Republic Bank is the largest branch of the union, where we represent a little over 2,500 workers in the various bargaining units for which we have recognition in the bank. There are 3 bargaining units. One is made up of persons of a small bargaining unit made up of persons who are involved in work of a technical nature, those persons who would do engineering and related functions, technicians and that kind of a thing. And then you have the other population, the larger population that is directly involved in the business of banking operations, supervisors and clerical staff. So that would take into consideration the population for which we have recognition, and the negotiations that would be attracting the significant attention at this point in time is for the larger body of the workers who are involved in the actual banking operations at RBL. And of course, one of the difficult issues in the negotiations would have started in about August of last year, thereabouts, and we would have had maybe approximately 18 meetings or so far between parties. And one of the major sticking points would be the item of salaries, where the bank has a proposal before the union and workers of a 9% increase over the 3-year period that we are negotiating for, in response to an adjusted position of the union of 21% over the period. There are some other issues, other significant issues in the negotiations. Pension as an example. Public Bank has a pension plan for which they have had a contribution holiday for in excess of 20 years. While it is non-contributory, the bank is not contributing anything, and of course we do not subscribe to the notion that a contribution by an employer to a pension plan is any act of charity towards workers. In fact, it is, in our view, merely a deferred payment that is due workers for the contribution that they are making to the productivity and the wealth of any particular enterprise. And that particular item is one of great significance to us, because one of the issues that we are faced with is the harmonization of the Republic Bank pension plan to the National Insurance Scheme pension arrangements, and which means that at the end of the day, the bank, a worker who leaves the bank ends up with a pension that is significantly reduced based on what they would have been entitled to from the bank's pension plan. I will not go into the complexities of that unless I'm asked, but that's a significant in the context of the negotiations. And of course, you have some of the other normal issues in our negotiations that we are faced with: consolidation, of course, of living allowance, which the bank has resisted for many years, and the level of cost of living that should be paid. We do have some significant differences on that. Another area that we have, the bank may not see it as an area of fundamental import, but we do, and it relates to the maternity leave provisions at Republic Bank. The bank maintains a position of observing the floor that is set by the state, which would be the 13-week provision that would be encoded in the current legislation. But of course, it has been mooted, and it is currently before the Parliament in any event for many years. Right? It has been mooted that the maternity leave provision should be increased from 13 to a minimum of 14 weeks, and Republic Bank steadfastly refuses to make that improvement on the ground that it is too costly. And they have indicated that it is only when it is passed as law that they will observe that provision, and we are of the very firm view that it is an excellent indicator of the low value that the bank places on its population of workers, and particularly so female workers, because of course more than 70% of the population of the employees at the bank are female, and it tells a story that is reminiscent of the days when a female worker, upon being discovered to be pregnant and having to proceed on maternity leave, had to apply to get back their job. And of course, the story around that is that the trade union movement would have agitated for the current legislation and that kind of thing. But I make the point because, as I said, it tells a story about the attitude of the bank in terms of how it views and how it values the workers who create the wealth in the institution. The question has been asked about the financial state of Republic Bank, and I would just want to quote some figures to give life to the question. Over the period 2005 to 2011, that is a 7-year period, the profitability of the bank increased from 860 million to 1.17 million. So that it would have moved from 860 million or thereabouts to 1.1 billion or thereabouts over a period of 7 years, which is a growth rate of approximately 5% a year. And of course, there were significant increases in both the income and the asset base of the bank over that period. We have been making the point as a union that that wealth and that profitability could not have been created without the input of the workers. And the bank has not argued against that. As a matter of fact, in its public statements, in declaring its half-year annual performance for the current financial year, they have indicated that they are on the same growth trajectory, and the managing director of the bank has made the point publicly that the results could not have been achieved without the contribution of what they have described as their valued staff. But notwithstanding that, the evidence of the word, the written word, as opposed to the action of the bank, there's a significant contradiction. During the last round of negotiations, when the bank would have been equally or less profitable, not significantly, but equally or less profitable, we were able to secure, or parties would have agreed to an 18% increase over the 3-year period ending May 31 of 2011. And in a period when the bank's profits have continued to rise, and it is expected to continue to rise, because there is no indicator which suggests, notwithstanding the softness in the economy, yes, there is no indicator which suggests that the bank, the roof would cave in on the bank, or that there would be any significantly diminished return to the bank in terms of its levels of profit and that kind of a thing. The bank's proposal is 50% less than what it was at that point in time. And we feel that these are indicators of the value that they place on the employees. And it is for that reason that we do have at this point in time a very strained industrial relationship. The relationship is strained, and we have been engaging in a series of protest actions to highlight that relationship to the general public, one of which would have been a massive protest demonstration, a candlelight vigil that would have taken place about 3 weeks ago on a Friday 3 weeks ago, when over 750 workers from Republic Bank would have demonstrated within the confines of Port of Spain, and particularly on Park Street, where the bank's headquarters would be located. Right? We have also engaged in protest action on May Day, where workers, significant numbers of workers from the bank would have taken a day to demonstrate publicly on the streets of Claxton Bay, I think it is, right?
In support of TCL.
Yes, in demonstrating our support for the TCL, the striking TCL workers and that kind of a thing. And of course, demonstrating on May Day what we do on May Day, right? Engaging in protest activity and also celebrating our achievements, looking at our successes and that kind of a thing. And several workers were involved in that process from Republic Bank. The bank itself celebrated its 175th anniversary, its 175th year of operations in Trinidad and Tobago, which interestingly began, I think, in 1837, 1 year before full emancipation of slaves in Trinidad and Tobago, when it was called the Colonial Bank. Right? Of course, they have progressed beyond that in terms of the language. I'm not too certain about the attitude. Yes? They have progressed in terms of the language that they employ to describe themselves. They are now the Republic Bank. And on that day, in recognizing the contribution of workers to the bank distributed a 75-cent cupcake to all of its workers. And I need not tell you that they were returned. The cakes were returned. And not only that, they did send sometime shortly thereafter, which was the subject of some public activity by the union. They did send a larger cake to the union, very well decorated with its logo and its 175th year recognition business and that kind of a thing. And we took it and we also returned it on a particular day to demonstrate our resentment at the way the bank has been treating its workers who it claims are in fact its greatest asset. It is not a very comfortable situation in terms of the relationship between the bank and the union at this point in time. And it is important to understand historically the industrial relations process at the public bank. It would have been in 1984 thereabouts, if I'm not mistaken, that the workers of the bank and the union at that point in time would have taken strike action. And 3 years thereafter...
Just a footnote, at that time the representing union was not...
It was the Bank Employees Union. That is prior to the merger between the Bank Employees Union and Bank and General Workers Union. But it has some important historical significance because at that point in time, you see, the BIGWU was considered to be a house union. And it was important for the union at that point in time to make a statement to have the bank treat it, not as a house union, but as an independent and meaningful entity representing the interests of the workers. And it took strike action at that point in time. And it is important to note that 3 years later, on the same date that the union had served strike notice, the bank took lockout action against the workers. So that you have, and what is also a very interesting point about that was shortly after the passage of the legislation, Section 61D, if I recall it correctly, under the Act, which provides for the ending of a strike or lockout at the expiration of a 3-month period. So that for those of us who may not be familiar with the history and who only understand the contemporary environment, the TCL workers were not the first workers to really test this provision. The first group of workers that would have tested this provision, as the records would reflect, would have been the Republic Bank workers under the under the Bank Employees Union at that point in time. But I make the point simply for the historical record. And so that the relationship between the bank and the union has not always been a relationship of cordiality. And each time that we have negotiations, the negotiations are punctuated by this kind of pulling and tugging. And of course, on this occasion, protest action has been taken, and we will continue to take protest action to bring some fairness and some justice and equity within the confines of the bank, insofar as it relates to the distribution of the wealth, because it is a completely unfair situation that is existing. And I want to emphasize that 3 years ago, when the bank was not as profitable as it was today, an 18% increase was secured. And today what is on the table is a 9% increase. The bank has indicated, and it is only as a result of action that has been taken by the workers. They have circulated to the workers in a public statement to the workers that the 9% is not their final position. And we have invited them to, as we speak, only today we have invited them to submit a proposal which places the real value that they place upon the employees, because clearly the 9% is not the value. And we are fed up of the what I would describe as the chinks in arrangement and the haggling in the negotiations. We are of the view that they must come clean, and we must try to bring this thing to a conclusion, but on the basis of fairness, on the basis of justice, and on the basis of equity. And I want to make a point in concluding about the issue of equity. There's a document, I don't know how many people may have followed it, but or follow it, but each year the firm of Holik Rajkumar Management Consultants, I think the acronym is HRC Management Consultants, they do a managerial and professional compensation survey or report. And in 2001, that report placed the average annual chief executive officer base salary. I am not speaking here about returns derived from shares and investments and all of the perks that they get. We are dealing with base salary. It placed it at $430,519. This is in 2001. And it quoted, this was a 2007-2008 survey. And I quote, they said that this was a more than 50% upward movement over a 5-year period. So that over the 5-year period prior to when this particular figure was quoted, it was 50% less. So there was a 50% increase. And by 2007-2008, and I quote again, executive pay cited as more than doubling over the period to an average of $963,234. So that whereas in 2001, it was at $430,500 or thereabouts. In 2007-2008, it was $963,234. And you can do the math. So you know what you're talking about. You're talking about a 100% increase over that period. It is rationalized in their own way and that kind of a thing. But the most recent survey that would have been done by the same firm reflects that for 2010-2011, for that period, that and maybe 2009, that increases on base salary for executive management and senior managers and that kind of a thing in the survey that they would have done is in the vicinity of a 5% increase per year. And if we take that, already, what you are dealing with is a circumstance of gross inequity in the society. Because if we look at the annual economic survey that is put out by the central bank, 2007, what it reflects is that wages covered by collective agreements at that point in time averaged 3 to 4% per year. Then you have sales, which gives an average rate of inflation of 6% per year over the same period. If we look at what is taking place in the international environment, we would know that one of the factors fueling the Wall Street movement and its offshoots in various other parts of the world is this growing inequity in income distribution between these executives and the propertied classes in the society and working people. And we are not insulated from it, because what the figures reflect is that there is this growing inequality in the society. And there has been this attempt to suppress wage demands by seeking to impose, denials notwithstanding, to impose an informal wage cap on workers, a history that is well known. I need not really get into the detail associated with that. And we know the struggle that has been put up against that. But the response of Republic Bank and many other employers in the society, we have absolutely no doubt in our minds that what has buttressed the attitude of trying to continue to suppress workers' wages really has to do with a concerted attempt to have workers pay for whatever mismanagement or crisis may exist in this society, as is happening in many, many other societies in the world today. And we will continue to engage in protest action and in acts of resistance to this attempt to really dilute social justice even more, because it is already diluted.